Hi, everyone. Welcome to the official ESOP Radio. We are excited to have Art Hoover join us today. Art is the CEO and co-founder of Matrix HG. Matrix is based in Concord, California, in the San Francisco Bay Area. We helped Art and his team at Matrix become 100% ESOP employee-owned in 2023. They manage the HVAC systems of large commercial and institutional buildings throughout the Bay Area. Art also races cars on the track. There are many parallels between racing and the long-term focus of ESOP business ownership, which we will explore. I'm Trevor Gilmore, CEO of Menke. Without further ado, let's dive in. Thanks, Art, for joining us here.
Trevor, it's always good to see you. Thanks for having me.
Art, before choosing an ESOP, what exit paths did you seriously consider, and what ultimately ruled out a third party or private equity?
Well, to be honest with you, there's, as when you're running a business, you're always running the business and you start thinking long term, like, okay, well, what does this really look like for exit strategy? There's a lot out there, but there's a lot of unknowns. And the first time I went to an ESOP, we're like, oh, let's go look at this ESOP thing. And I went to a conference with a bunch of attorneys putting it on. It was so bad, I left early. I had no idea what they're talking about. I couldn't understand what they're saying. I'm like, this is way too complicated for me. And then we went and met with a couple of big conglomerate, large HVAC company. And they explained to me how they do things, how the company value. I have to stay on work with them for multiple years. And then they reevaluate the company based on how we do. That did not excite me. We ran this company for 24 years. The last thing I wanted to block. Somebody tell me what to do and how to do it. I would struggle with it. The other thing is we have employees now 21 years with us, and they've worked as hard as we have and want to give them the opportunity to be, part owners. And the ESOP gave us that opportunity.
Awesome. You started the business, 2002?
Yes.
So you checked out many different options, pros and cons, zeroed in on, hey, Matrix, better off independent, a great thing going, great team. Let's take it to the next step.
Right. Well, one of the things when you're looking at it is when you sell your company and you sell to, like for us, we have Honeywell or there's Carrier or Train or somebody. They're buying these companies up and they look for profit. They don't really care about your people. They don't care about anything. They want to know how much cash you generate. That's it. Being 24 years, I've trained these people. They put a lot of work in for it. So I want to see them stay. If we sold the company to one of those big companies, they'd be gone. Like the company dissolved, Honeywell 5.0 or whatever it is. And Matrix was gone. We didn't want that. We worked too hard to make a good game. We have a lot of great clients. We have just the employees. We felt like we owed it to them. And honestly, the value we got, we felt was a good price for better than what we would have gotten in the private market.
That's right. And scaling the business, you all started from zero in 2002, scaled it up to serious revenues, built a team. So the idea here is, hey, keep it going independent. And the ESOP, being a fair market value, got you a price that, when you weigh all the tax benefits, outweighed what you would have gotten in the open market. Say if you took the business to market, sold it to one of those competitors, sold it to private equity.
So with the ESOP, there's good and bad, right? With everything. Well, once we met with you guys and realized, okay, well, this is what the value works. We started looking at the tax incentives for the owners, right? Still under 100%. And there's complications and everything. Right? There's a whole path that you have to deal with. But we've been learning. It's a learning process for sure. But I feel it's been a very smooth transition. The day we went in ESOP, nothing changed in the company. We stayed running exactly the same. All the management stayed exactly the same. And that was actually really nice.
So business continuity, that's kind of a underrated aspect of these ESOP transactions, because you think, hey, often business sell, the big focus that people pay attention to is the overall price, right? And so on. Business continuity, keeping the team in place, company's operations continue, the board, maybe we can talk about that, later, possible governance changes, independent directors and so on. But overall, the company is still staying as it is, intact. Operations are continuing as normal. There's no shake up.
Not one thing changed. Not one. I run it exactly the same. The difference is actually the interesting piece that changed was how myself and my partner Dan approached this a little bit. Is now I'm the CEO, not the owner anymore. I'm CEO, and meaning I have to drive stock price. That's my job, and I kind of had to change my mental focus a little bit from just being founder and running and putting fires out to like I got to drive stock price. Like, let's change your mindset, and it's been helping me transition the company from mom and pop shop. You're doing 90 days plan. And it's like, okay, well, when are we going to get 100 million? When are we going to get 150 million? Like now let's start looking farther out, bigger.
So changing mindset too, co-founder, you wore so many hats. You stayed on post-transaction as a CEO. So that's a new title. I mean, your role, hasn't changed much, but CEO, but your focus now is stock price, right? Because now you have this annual valuation, and it's more of a strategic focus probably than before, where you're focused on growing the business. And then as a co-founder in the beginning, probably sweeping the warehouse, hiring people, doing everything. And now it's CEO seat, focused very much on long-term strategy, share price. So that's probably a fun focus.
Well, it's changed things, right? I've had to like change my focus, but it was like, I probably should have been doing this 10 years ago, 15 years ago. And it I kind of almost mad at myself, like, why wasn't I thinking like that? So it's actually helped me, and I think it's going to help the company in the long run. When we first started the company, we used to put $2,000 in. That was our only money we ever put in the company. We never borrowed money. We put $2,000 in. We worked out of my house. And now we have 2 locations, and like, I think we have about 200 employees, and I would say about 140 of the employees are union. They're not part of the ESOP. The other 60 are non-union, and they are part of the ESOP. But it's now like it's allowing me to like give back to them, and that actually it's pretty fulfilling.
Absolutely. And I remember that back from when we were doing the initial assessment modeling, the $2,000 investment. I was like, we need to double check this. Is that right? And so
it's kind of things start. That's for sure.
Absolutely. Yeah. So good ROI there. Of course, sweat equity, right?
Yeah, no, it was definitely sweat equity. We put in a lot of time. We still put in a lot of time because you care. Like, I don't want to just bail on these guys. Part of the ESOP, what makes it work though, is you want to have a management team that's ready to replace you, and they can't run the company without you. That's the only way this works. If you don't have a good team beneath you, it doesn't work unless you want to stay for a long time.
That's critical for an ESOP transition is the team. You need that rock star solid team in place. And if you have one partner, 2 partners that are also the brain trust, it's not going to work.
Right. Yeah. If I did all the decisions throughout the company, I'm the company at that point. I have a lot of great people here, but they've never really dealt with all the banking, and I have a CFO for that, but all the other stuff they've never seen. So we're now like training them to start understanding the business side of the company. And that's been interesting to watch, because it's one of the things we always wanted from them, think like owners. It's hard to think like an owner, not getting paid like an owner, or dealing with all the other stuff. So now it's giving them some more growth for them. But my goal is for them to make more money. And I told them that as we start scaling this thing up, I pay you more. Like, I want to see you.
And you're a few years in now. The deal happened using round numbers 3 years ago. How is the team handling it now? Obviously, in the beginning, it's very intangible. Okay, what does this mean? And now we're a couple years in. They've seen a few ESOP account statements, and especially on the finance side, they understand the impact of the growth, and how it all works. So how is that, in terms of excitement, retention, and then even recruiting? The fact that you all have this skin in the game.
I think on the recruiting side, there's something most people, it's hard to explain ESOP to a new recruit. It's hard. People that have been here for 3 years, they're still trying to figure it out. It's a very simple system once you understand it. To recruit somebody and go, hey, once you get vested in after 6 months, whatever we set in the contract, you're now part owner, and you start getting free shares of the company. It's a retirement account for them. It's a good thing. And it kind of locks in the company, meaning like, the company's not going anywhere. We've got a good team that's here. We're going to keep this thing around for a long time. And I think that the other side of it is the first few years, I was like, the company's it's leverage, right? Because it owes myself and my partner the most amount of money. And so the stock price is So it's actually the best time to get in.
It is. I always say that it's the best time to be in an ESOP-owned company is right after the transaction, because you pointed out, how does the ESOP pay for it? Well, the company cash flows. It pays for the ESOP. So if you get in right after the transaction, you get to ride that wave. It's basically...
It's like I said, it's a very simple system. It's complicated at first when you're trying to understand it, but once you start dealing with it, you're like, oh, I get it now. I was really nervous when we first started it. We had to hire a trustee, board of directors, and I'm like, oh man, what's this trustee gonna do? She's gonna come in and tell us exactly what to do, and this could be weird. She's been great. I talk to her once a quarter or once a month sometimes, and we have a conversation of where everything's at, where the financials are. It's been a really easy transition for us.
Yeah, for you listeners, the trustee, if you listen to other episodes, you'll know this, but they act as the fiduciary for the ESOP trust. And in these negotiations, they are the buyer, so they're on the other side of the table. And at Menke, what we do is help the business owners, help the company. So we're on the other side, and there's an arm's length negotiation that goes back and forth. After the transaction, the trustee is viewed as a business partner, and they want to stay in contact with the business. Generally not going to take a board seat. Maybe there's some negotiation on independent board seats and so on. But the hallmark of a good trustee is to really focus on the ESOP, on that as a fiduciary role, making sure that everything's working well under the lens of the ESOP. So Art's experience here, highlights that. Several years in, the trustee that Matrix HG has is that of a strong partner, but allowing the board and the company to operate as they would normally.
And the board, like you see movie, we were private companies, we never had a board. So we had to hire 2 independent board members. We had first year one, second year we had to get a second one, and then I had my partners on there and my CFOs on there. And so you didn't really know how this really worked. I had to learn how to run a board meeting, right? It's like stuff that I'd never have thought about. So we're sitting there, and actually what we found is some of these board members, they have so much experience. It's actually been helping the company. And so I've actually been talking just right before this podcast. One of the board members just emailed me, and we're working on some change stuff that I need help with. This is what she does. So I'm actually hiring outside the board to come and help consult with us. It's a benefit to the company, actually. It's more brain trust at the top. Really helps.
Yeah, the 2 members you got, it seems like they filled a gap, in essence, right? Because you, business partner, CFO, you have that expertise there. So it's like, okay, these 2 independents, you ended up picking people that have this deep expertise that's going to complement and really help drive good, well-rounded.
One board member is a previous CFO of another ESOP, a large ESOP, mechanical company like us, but they're 20 times bigger than us, I think. So I have 2 CFOs on the board. Now that's about as fun as you can see. I mean, them talking about an Excel spreadsheet, they'll go to town on that. But my independent, the other one, Cynthia, she's kind of a business consultant. She's great. She brings a whole different perspective on strategy and stuff that we really never thought about. We always just kind of like, oh, we'll try to go over here just because it happened. She's like, no, we're going to build a plan and we're going to get there. You know what I mean? I have to slow down and be like, okay, you're right. Let's do this right. And I wish we would have done this years ago. I think we would have been a lot farther along. Probably would have been a couple, 250 big car company by now.
Yeah, and you're on that track though. You're making way. So let's change gears a bit and talk about race car driving here. So as a race car driving, drag racing in particular, what analogies do you have for your passion, which is that auto racing? I think you were just in Phoenix, you said racing and building Matrix HG from the ground up.
So kind of an interesting story was I was racing before I started Matrix, and I've been racing for a long time. I didn't have the money to race, but I did. And I was sitting in my trailer sweating and drinking water, just going, this is tough, right? And I'm seeing these people with nice race cars and motorhomes, and I'm like, how are they doing this? I'm working my butt up, and I can't afford any of this stuff. And finally, I kept talking to all these people, and they all said they own their own companies. Like, okay, I know what I need to do. So I went to grab my partner, Dan. We were floating on the lake, and I said, hey, let's start our own company. And he's like, let's do it. So 9 months later, we started Matrix for $2,000 and out of my house, 2 old vans. And we started the company. I still can afford to race more. That was how it all started. And it kind of goes the same. Like when you have the difference between a good employee and a great employee is passion. If you have passion, you will push through it. And I call it the concrete inferno. I think it's where when everything's on fire, you put your head in, you keep marching through. And in racing, it's the same thing. If you race bikes and triathlons, it's the same thing. You get mentally get beat up and want to quit. There's no quit. It's put your head down and grind through it. And in racing, there's times when the car's ready to go. I had one. I went 16-hour drive. I showed up to test. I put these cars perfectly together. I get there, unload my car that I wanted to test, and there's water coming up the header. I leaking head gasket before I even got there. I rolled it, shoved it in the corner, raced my other car, and okay, we ended up winning the race. But I was just, that if you don't have the passion, you don't have that want, it won't work. And then it's comforting anybody out there that's an owner, they know we're probably the best paid babysitters in the world, and you take care of your good people, and generally when it comes to my office, it's never good. It's never, hey, we did this great job, and here you go. It's, we got this problem, here you go. And so racing for me is actually giving me an outlet. When I go racing, I relax. I let my brain turn off from work, and I can turn it off because I know I won't be competitive if I'm thinking about work. So it's kind of goes hand in hand.
Absolutely. Nice escape. Absolutely nice focus outside of the intense focus of the business. And of course, racing very intense too, every second or every.
Yeah, I lost by 17 10,000ths of a second in Phoenix. I'm still mad. It was my fault. I made a little mistake and cost me that win.
That's very similar to bike racing, actually, the time. So you can do these races that last for, 4 hours, and it's a photo finish at and then you have to figure out, okay, who actually crossed the line first.
Yeah.
So bike racing is very similar to car racing, and also the time trials in bike racing. It's basically you against the clock, but there's 20, 30 or 50 or sometimes 100 in a big race, other people, and everyone is going every 30 seconds. And then those can often come down to very, very split second, to see who actually won.
Right.
So the precision there.
But that's why we do it. If it was easy, I wouldn't do it.
Yeah.
Boring. I dirt bike ride and snowmobile ride, and I love the boats and everything else. And we always made the joke on the dirt bike trails. If you didn't know which way I went, if there's the hard way or easy way, go the hard way. That's where I went. I will not ever go the easy way.
Yeah, that analogy, it comes through too with business, right? Because you decided, hey, at a young age, start Matrix HG from the ground up, take on that risk, work hard, because it probably would have been easier the past 25 years if you stayed put.
Not funny. I was 26. So I started the company, got married, my son, all in the same year. It was like, well, if we're going to do it, we should just create chaos right now.
That's the best time. And it worked out well. So let's talk about resiliency here too, because you all went through a couple ups and downs through the economic cycles. You started in 2002 here in the Bay Area. That was right post .com 1.0. And then 08 downturn, and so on. So kind of talk about that in terms of ups and downs. Were there days where it was super hard as being an entrepreneur, in those downturns, and then basically working hard, smart through that, and how that basically translates, really to where you've built Matrix today. I consider you all in a very strong position in the marketplace and what you do, and those lessons,
Well, one of the things I learned very, very harshly was during the 2008 off. Everybody, every company, just 110% easy money. You were selling, you were getting out and trying to get your work done, get people to do it. And we were so buried, I didn't see it coming. I think it was 2009. I was running 120, and then all of a sudden I saw the giant clip. It had no working for happened. I didn't see it coming. It slowed down. It was just going. And I remember in my calendar, every 2 months, it popped up. I'd smile. It said, keep selling. I don't care how busy you are. And what had happened, we got so busy, I actually pulled back on the sales a little bit. We just couldn't manage. I couldn't get the work done. And what I've learned is, I don't care. Get the work in. We'll make it happen. Because you never know when it's going to stop.
So focus on sales. That really helped get through those valleys and those economic contractions that happen. Yeah, and that's great advice. And I think that applies to all industries.
During COVID, unprecedented, right? Nobody's ever been through this. We're in California, so we were the first to shut down, and we don't know what's going on. And what we basically transitioned immediately. So I found who is going to be open, and that was government, schools, essential stuff. So I switched my sales team to go find what's essential and where we can stay working, and we did a good job with it. Stayed busy.
Yeah, and I recall looking at the financials, back then during the COVID, some of your competitors who didn't pivot, right? They definitely noticed a huge pullback in revenue, right? Because offices, no one was going there. So you still have to maintain all those. All those systems have to be maintained, but it's not going to, the wear and tear and, and the maintenance probably goes down, with an empty building versus.
It does. The wear and tear goes down, but they still have to run it for minimum air and for fresh air and keep the boilers hot. Because a lot of the buildings, what happens is the piping will actually, once the hot water goes cold, they have Victolic gaskets and they start leaking. So they have to keep everything kind of running. And so we just found a way to stay busy. And that was the key, was keep working. And a lot of people wanted to work from home to stay at home. It's great. We're not that way. But how do we go take care of our building and stay working?
Right. Yeah. Because you all are in the fields. You have to be out in the field. And
so our mechanics union, well, they don't get paid if they're not working. I take it to heart that these guys can't pay their bill. I want to see them buy homes, cars, take care of their families. So when all of a sudden it's like, they need to stay home, I was like, no, we're going to go find work that they can go work at. And so we can get paid. It's important. Sometimes you got to transition and go find it.
That instinct worked well during the pandemic. Yeah. And what do you see now? We're 2026. I know a couple of years ago, interest rates went up and, there was a saying, survive to 2025. I know that was like the saying when we were doing the deal back in 2023.
Yeah. So, what we're seeing, San Francisco still, it's slowly coming back. It's not going to be for a while. We're seeing the TIs pick up, which is tenant improvement work. A lot of the capital work's down a little bit because they're waiting for the buildings to start filling back up. So they're actually trying to get them to move in. So they're spending money there, but they're trying to just rebuild the old system, the old chillers, boilers, and cooling towers, and just kind of pushing that off. So this year's going to be a good year. AI, data center stuff. There's work there. We're picked up work in Arizona right now, but service always stays busy for us. We have a pretty big service department, and then we mainly do retrofit work. So retrofit work for us is rebuilding buildings. And so they don't want to go, we're not building a whole lot of buildings right now, but we are rebuilding and repairing the old ones. And that's really fits our niche pretty well.
That's great. Yeah. In the Bay Area, obviously AI, I always say you can tell the economy of a metro area by the billboards. You cruise on the 80, the 101. These days, it's all AI.
And, I hate to say it like this because obviously it's going to stay around. We don't know which companies are always going to stay. There's going to be a couple that'll fall, and there's always what happened in 2008, a lot of people were putting out there because companies were making money, people were investing a lot in them. Some of these companies went under and it cost a lot of people a lot of money. So I'm a little hesitant because I feel that they're a little overvalued, but I'm blessed for the work. I'll take the work, and then in a few years, it'll be some other trend. You just got to be able to transition.
Exactly. It sounds like, speed of changing course, pivoting, right? That's been one of the key strengths that you all at Matrix HG have, the ability to do that, being able to pivot quickly in a smart way too, understanding, hey, this is where we should be. Let's focus there.
And the nice thing about the ESOP, we're not restricted to do anything. I don't have to go ask anybody for permission. If I see an opportunity, we're taking it. I still make the final decision. It's allowed us to it's freed us up to start rotating the company so it's employee owned. On the other side of it, still stay independent.
Right, because overall board's job is to support the CEO, make sure the CEO has the support necessary to execute.
Right. Drive stock value. That's my job. I have to keep telling myself that because sometimes I get I still like selling and helping people, and I gotta get back into it and say no. But your job is strategy and go create a plan. Keep looking farther down the road.
Yeah, luckily with ESOP too, you get a value once a year. So you're not subject to the quarterly earnings, like a public company.
Yeah. I'd lie if I didn't think I was running the numbers every month. Like, okay, what's this doing?
Oh, that's a fun part to do. So once you understand the value metrics, what really drives it, it's cash flows basically for ESOPs. And then say, okay, what does this look like? Increase this lever 5, 10, 15%.
Right.
Go big, increase it by 40%. What is that?
Yeah. The hard part right now for everything, I think, is finding quality people to come do the work, right? It's one thing we want to hold our quality, our level of excellence high. It's hard to do. Finding people that are tech. We're in the Bay Area, so pays really good. So we have to compete with that. And then a lot of people want to go do tech, and they've kind of lost the mechanical side. I think realistically with AI, we're going to start seeing that's where the money's going to be, is people actually can go repair things, fix.
I'm seeing that in our client base as well. So, for people that actually know how to fix and build things, overall, and time will tell, right? But it seems like AI, you'll be able to operate a business smoother, and so on, less friction, but those skills are always going to be in demand.
Yep. People need to have hot water. We like cold showers. Everybody's got to have, be comfortable inside their buildings, like cool and heating. So that has to happen.
Yeah, it has to. And then you think the future too, there's this idea of converting offices to residential. I mean, well, it's not an idea, they've been talking about it for a while, with vacant offices and so on. All those places have to be replumbed or rejiggered on the HVAC systems. Yeah. So I was in the Salesforce Tower this week, and speak about complex HVAC system, that all these glass buildings, right? And they just trap heat.
Oh yeah. Luckily in San Francisco, it's a very tempered climate there. A lot of fog. The buildings are so close, they don't get a whole lot of sun load or solar load on them. But they do. I mean, there's a lot of heat inside, but the economizers, we use economizers. Actually, I was doing something else, and these guys on the East Coast are like, "Why don't we stay an economizer?" Well, out here, we use economizer as much as we can. Back out east, they have so much humidity, they can't use free cooling. And where economizer, we bring in cool outside air and just run the fans a little higher and use that to help cool the buildings. And before it gets too warm, then we have to start chilling the chillers or whatever else whatever equipment we got on. So San Francisco, though, it's very diverse. There's a lot of city steam. There's just a very diverse place, and which makes it kind of fun to work out.
Yeah, I can imagine those large old buildings. I mean, a lot of them have steam, right? Like steam heat, and all the systems are underground, right? I mean, you're talking about in the basement.
Yeah. Like a lot of our equipment, like we'll have chillers and boilers and everything throughout the building. Like chillers usually on the roof, or they'll be in the basement. They're never really in the middle, but the boilers are generally on the roof. On a high rise, the boiler on the basement, you got to run the flue all the way up.
So that's why some of these buildings that are on the roof, you see like steam basically generating,
cooling towers are up there usually.
Good stuff. Okay, changing gears on the overall ESOP transaction. Was there a moment during diligence where you questioned whether the ESOP was actually the right call? Because I know due diligence, right, with the trustee team, the banks, there's a whole data list, and they're questioning everything, and that process can be quite stressful. So was there a point where you're like, hey, what am I doing?
No, we knew what the final goal was, and we wanted to get there. It's just honestly learning about understanding what this means, because there's a lot of terms and rules that we had to kind of abide by or figure out. I didn't know what they meant, so we just had to. It was more just learning more, and we kind of learned every day from it. You guys went online trying to figure out what that is. Once we kind of saw how it all worked, because I think we had more fear in our head than it was actually real. I mean, all the unknowns, you just didn't understand it, so you're kind of afraid what you don't know. But honestly, the transaction was my advice for anybody to like, hey, I could get it done in 3 months. Yeah, it's not going to happen. Like, it may be really lucky, but definitely give yourself more time. Don't pick yourself on time and put the pressure on, because it just gets more stressful.
These transactions, they go through distinct phases. So condensing everything in 3 months, that is pretty quick. First phase, you want to assess, hey, is this even interesting? Value, structure, bring it in a bank. Not
about 8 months from start to finish, all said and done.
Yeah, and I think that was about with your transaction would end up being from the time we initially started work to actually close.
Yep.
And that allowed for good decision making along each phase. Versus
learning. You guys are actually really good with helping us. Like, hey, this is what's going to happen in the next phase. Let's prepare for this. Okay. You know what I mean? And we understood it. It's the unknown is what always seems to kind of like, not scare us, but kind of like you had more questions than answers. And then once we understood how it all worked, we went, oh, okay. We can get that done.
Try to manage those unknown unknowns. Yeah. And I think you all asked me too, like, hey, how can this whole thing blow up? What's the downside? Yeah. It's like, well, the downside is like the downside with anything, it's doesn't work.
It's the only way this works. The company's got a cash flow. If you're not cash flowing, your stock price ain't going up and you're not getting paid back. So there's a couple different ways you could do this. So we did 100% ESOP and we did 0% funded by a bank. So we self-financed it. So myself and my partner basically take all of our shares of the company, put in this trust, and now that trust owes us the money, and Matrix pays us basically the money out. There's a whole legal loophole there, but you can't pay you any money if you're not making money. So but we took that risk to kind of keep the burden of the company, and we get interest instead of the bank. So, but some people, we're all young, right? If you're 50, so we're in a different spot where some of these 77 years old and they don't want to stay on. They're like, they need somebody to take over. It's a different look. It's a different reason.
Definitely. I mean, I've noticed a trend as well with a lot of our clients in the past several years are similar to your profile, where you still have runway left, but you've built this company and you're very intentional about what that future looks like. And you want to basically plan and execute your own solution there versus, waiting, which we have seen with older generations, where it's like, okay, you have now a majority shareholder, who might be well past retirement age, and then is starting to think, hey, what's my exit? Right? And that's a whole different solution and a whole different.
It's interesting. Like we've seen it. We've been to some auctions where old HVAC companies are up for auction, and you see the old owner in the desk and dirty desk and just angry. And I'm like, I don't ever want to end up like that. I don't want to be that person. And we've got such good talent here. We're trying to groom them to take over for us. I want somebody that's passionate, that the passion I had years ago where they're just ready to go. Like, let's take, pick up the ball and start running with it. And that's what we need. The company needs, right? And I don't have that as much as I used to. And the company, I feel I'm doing it at a disservice to a certain point where I have a lot of experience to help people, but I want to see them grab it. The only way you learn, I can't tell you how to be the leader of a company, how to make decisions, why, hard decisions. You've got to be in the hot seat to deal with it. I'm going to make mistakes. I got to let them do it.
So having that culture in place too, that's growth oriented, says, hey, let's grow. Learn on the journey here.
And we've learned the hard way. Growth isn't always great. It's positive, profitable growth is great. And so chasing revenue doesn't work. It's chasing profit works. And so we passed on our goals on profit we want to make. And then we start creating revenue goals for our plan to get there. And that is really helped us a lot.
You sound like a CEO that's concerned about future stock price there.
My job.
Growth, profitable growth. My friends in tech, it's, they always just talk about growth, right? Because you don't care about profit, and in my space, and it's all ESOP companies, it's like, no, cash flows, profit. That's what matters, not just growth. It's good.
It's a different mindset, but it works. Honestly, I'm a very conservative person when it comes to growth now because I've learned the hard way multiple times. And I laugh at people. I actually laugh at myself now. I used to laugh at people, but I laugh at myself. Where I'd be like, oh, you went to college. I didn't go to college. My partner didn't go to college. And I'm like, you spent a couple $100,000 for your education. And I was free. And I was like, I was proud of that. And now that I'm an old man and I'm looking at this and I'm like, wow, I think my education cost me about $20 million. How much mistakes I've made over the last 24 years. And I'm like, well, who's the idiot now? And so I kind of laugh about myself. I'm like, wow, I just didn't see it. And now I'm seeing you and want to give my experience to the younger generation and help them out as much as I can.
Yeah, and all the employees at Matrix, they have a great leader in you, and they're lucky to have that. The mentor.
Honestly, they're extremely lucky to have them. They have such good people. I do enjoy working with them, and they want to do a good job, and they work hard. We're obviously we're in a servant type industry. Stress is always high. Clients are always, you're never calling it as they want to give you good news. They're calling you because something broke and they need you to come fix it. So that, you know what I mean? It's just a constant go. And It's a different, unique mentality.
Absolutely. So you had a 50-50 business partner, and you and Dan both decided to go down this ESOP path. From my perspective, you both it was basically unanimous. It didn't seem like there was much friction, but was there at all, in that kind of 50-50 situation, because to move forward, obviously you both had to say, yes, let's do this.
It's funny, if you ever met Dan and you meet me, we're about as polar opposite as it gets. Polar opposite people. But when it comes to business, we kind of, if he made a call, I'd back him up. If I made a call, he'd back me up. Might not always approve of it, but he was like, hey, if Art made that call, we're going with it. And so we came to this. We generally have the same idea. Luckily, the trust is always met there. Like if he fell and they go on the floor, cut it in half and give it half. Like I would never worry about anything. And when we did this, we're like, what's the best way to give back to employees and keep this company going? And ESOP kept coming up. And then finally, once we started really learning about it, we decided, it was a pretty easy.
That was my takeaway as well, was, hey, these two business partners have alignment. There wasn't friction. Sometimes there is, where one is into it and the other says, I don't know. Let's think about something different. So right. Having that alignment, and the trust, I think that's all built in trust at the end of the day, as you said. When you have that, then it's like, okay, you can make good decisions and scale for the future.
Yeah, like I said, it's one of those things where it's a big decision. We built this company and we've had, like I said, had a lot of long-term employees. Our stuff's tied to it. Like any business owner out there, every bank has their fingers in my trusts, my house, anything I own, and pretty big deal. You learn to deal with a lot of stress over the years, and you'll find generally an older business or start off super nice. At the end, you're grumpy, grouchy, and just tired of somebody beating you up every day. And that has been an interesting one for us. Is trying to get these guys to start understanding, like, hey, it's okay. I want you to make these decisions. Start learning. It's going ESOP. I think it's kind of opened us up to like, okay, this is real. Like it's giving us a bandwidth to like, okay, the company's no longer ours. What does our retirement really look like now? So it kind of opened that up. Before it was like, we'll retire someday. Well, now it's real. Now we have it in place. It's running. Let's start planning for that. You got to build a strategy. Somebody's got to replace them. Somebody's got to replace me. How are we doing that? And now with the ESOP, that the business is taken care of. Now is just keep dealing with people.
So in the end, the ESOP allowed business continuity, was a great solution for you and Dan to sell your shares, get some liquidity, obviously, get good value for your company, but still be involved and really craft and plan your exit as you scale the business up to be successful in the future.
One thing we talked about is maybe me becoming like a 1099 employee where I stay on as kind of an advisor for the next CEO, or part-time, or I'm, a couple Zoom meetings a week type thing, and just still helping transfer the knowledge. It's 24 years of owning a company, you learn a lot. And it's stuff that you don't think about, but you already know the answer before somebody asks you the question. And somebody new is not going to have that. So you can kind of help that out.
Absolutely. And you have time on it, CEO. So it's like, hey, and I know you're probably thinking, hey, next couple of years, what does that look like? So fast forward 5 years, are you racing more?
Oh, absolutely. Absolutely. This year, actually, we're going to run the whole season on the West Coast, but there's a lot of stuff on the East Coast that we haven't raced. I've only raced a few times in Dallas and then Illinois once. And it's just a drive and time. And when my mentality was always, I had to be back Monday morning for work. And I'm a very strict person on myself. So I've learned, for me, I need to have somebody here where if I'm not worried about it, it'll free me up to race more. And that's really my goal. Not just racing. We like to travel and go up to the mountains and fish and hike. And so if I could do that more, I will be a happy person.
That's great. ESOP built the foundation. So Matrix HG seems to have a bright future. You have the right team in place, focus on profitable growth, increasing the stock price, getting that next generation of ownership in there, and excited and passionate for the future.
Yeah, absolutely. It's important. Our people, that's the company. the company's nothing without people.
So true. And it's more important now than ever is, hey, your best assets there. They drive out in the parking lot each day.
Well, and you see, most people know is that the next generation of younger generation coming up, they were raised different and they've been exposed to different things than we were back in the day, where a lot of them don't like to communicate over the phone or in person. They'd rather text or email. I hate that. I hate it because there's no connection to people. And I enjoy that. So getting the next generation to be more comfortable with talking to people and dealing with conflict resolution without panicking and being freaked out. Like, it's okay. Making a mistake, it's okay. We all make them. Still make them. And getting them comfortable with, there are people who are ready to make a mistake or get home. And I don't think I've reached anybody 5. I've always been like, if you made a call and it's wrong, all right, let's make the right next time. Let's learn from it. I learned more from my loss, my mistakes than I did my win.
Yeah. What are the learning lessons here, right? Because if there are, then it wasn't really a mistake. If there are none, then you're like,
yeah, exactly.
So yeah, that's all that is baked into the culture of Matrix. I saw that, when we set up the ESOP several years back, and obviously we're still involved, Menke handling the annual record keeping, all that with our compliance team. And that's a culture. And that's one key thing. The unifying theme here is culture, and whether to go ESOP or not. You have cash flows, you have this, you have that, but culture is one of the main reasons whether to go down that path or not.
Right. Yeah, I think, and you look at, I was thinking about it this morning, and I was like, we're like a small company, and it's a single owner, and they do everything. ESOP's probably not to be their best bet unless they have somebody up and coming that can push them out of their seat, or you want to go ESOP and then build the team. It's a lot. Like you need to have like managers that want to step up. That's important.
Exactly. You have to have that culture, people as a building block to make that whole thing work.
Exactly.
Art, thanks so much for joining us today. How can people find you?
Well, any of the NHRA races on the West Coast, I'm joking. Matrix HD, I'll obviously go online. But if somebody ever needs to reach out, I think my number's on there, email's on there. If you already have any questions, please reach out to me. I'm meeting with a company next week that they're looking at ESOP, but they just want to have lunch and pick my brain a little bit. I always look at it, and I've been helped throughout the years by people with more experience than me. So if I can help anybody, I like helping. I like seeing people succeed.
Thanks, Art. And thanks everyone for joining us today. Check out ESOP Radio on LinkedIn, Spotify, YouTube, Apple, and also check out Menke.com. We have a lot of ESOP news, etc. on there. Trevor Gilmore, CEO of Menke, thanks, and stay tuned for the future episode. Have an awesome day, everyone.